Welcome to the Capital Spreads Look to the Week Ahead. Today is Monday the 7th of January 2013. Firstly, may I wish a very happy and prosperous new year to all our viewers. We've had a very busy close to 2012, and again the activity and volatility has actually followed through into the beginning of this year. Now, many of the events in the financial markets have largely been driven by what's been happening over the Atlantic in the United States with the US fiscal cliff. Although agreement has actually been reached at the moment, many people are worried that this is only a temporary measure, and we could possibly see a repeat of the uncertainty and volatility we've had in a couple of months' time from now, when the US government tries to agree on raising the US debt ceiling, plus implementing some of the spending cuts that the Republicans have requested that the US government do so in order to come to the fiscal cliff agreement in the first place. Aside from that, we've had news out of the United States Federal Reserve, which has hinted that they could possibly wind down their quantitative easing program by the end of this year. Again, this has had a little bit of a negative impact on the financial markets, but it was very much expected that it would happen sooner or later. In terms of economic figures, we have a very busy week in terms of figures, and looking at tomorrow, firstly, we start off with the Swiss figures at 6:45 in the morning, where we're looking at the unemployment rate for the Swiss. Now, we're expecting a small increase there to 3.3% unemployment from previous 3.1%. The Swiss has been one of those currencies that's actually been watched very, very closely, simply because there has been government intervention before, and again, with any sort of key economic figures coming out, there could certainly be certain further action or manipulation regarding that currency. Aside from that, we have a slew of European figures out around 10 o'clock tomorrow morning. Some of the key ones would probably be the EU consumer confidence for November. Now, we're expecting to see a small improvement there. And we also have the EU retail sales figures around the same time at 10 o'clock. And we're again expecting a small improvement there to minus 2.1% from a previous 3.6%. On Wednesday, we have a number of other key figures that could certainly help move the markets around. In particular, if anybody's up overnight, we have the Chinese figures coming out at 1:30 in the morning. Now, we've got the Chinese CPI figures, where we're expecting a small rise to 2.3% from a previous 2%, and that could certainly help define the mood and tone for the rest of the trading day, as China, being the second largest economy in the world, can certainly have an impact on based on any statements that it makes. Then later on Wednesday morning, we have the UK trade balance out at 9:30, and we have the usual US oil inventories coming out at 3:30 in the afternoon. Now, many people watching oil at the moment will know that it's been on a little bit of a decline recently, simply because there's been an increase in the amount of oil that's currently in reserves. Again, for that very reason, many people will probably be watching the oil inventories quite closely to see whether the amount of reserves is actually increasing or decreasing. In terms of the busiest economic day of the week, we're possibly looking at Thursday, where we have quite a few key figures that will certainly help move the markets around. Overnight, again, we have quite a few key Chinese figures, including the Chinese business climate as well as the Chinese trade balance. Again, they could help certainly define the trading mood for the rest of the day. Then later on Thursday morning, we have the Bank of England rate decision as well as the asset purchase target. Now, the rate decision is expected to show an unchanged interest rate of 0.5%. I think many people will be more closely watching in terms of what the Bank of England says in terms of the asset purchases, whether they're going to actually now step it up, wind it down, or keep it unchanged. Then later on Thursday, we've also got the ECB rate decision coming out at around 12:45. Again, we're not expecting much of a change in terms of the rate decision. I think many people will be watching more closely the statement by the ECB president in terms of what their policy will be going forward. The ECB president actually expected to speak around 1:30, and that's when we tend to see a quite big pickup in market volatility. Around the same time, around 1:30, we've also got the weekly US initial jobless claims figures. So all those together will help move the markets around just a little bit. We also round off the Thursday with the US CPI figures. Again, we're not expecting much of a change of around 2% there, but it will certainly help add to the mix in terms of market volatility. And then finally, we round off the week on Friday, where we have UK industrial production at 9:30 in the morning, where we're expecting a small decline. And this is followed by US trade figures of US trade balance as well as US import price index around 1:30 in the afternoon, which will help round off the week. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.